Thank you all for coming here. It's raining, and also it's almost at the bottom of a bear market for crypto. Bitcoin today is around 35, which is about 48% from ATH. Bitcoin normally goes through these things, 90%, 60%. So we are close to the bottom, and this is probably a good time to think in terms of buying. As I mentioned, this is a large topic, and it depends on you. I want it to be driven by what you want. So the first 3-4 sets are conceptual. The most important is this part, which is the models country, which is the most important part, to help you understand how to value, where to invest, where not to invest. There are a lot of scams. It's a money NFT ape he talked about. I will take some 3-4 questions there, and then I will cover the operational part. How do you trade, and KYC and taxation, and that will depend on your questions. Feel free to ask questions. So first, let me define what is the reason in crypto I got interested. My first actual work started in 2018. Though I have programmed, I have done some work in 2011, 12, Solidity, etc. The work is, and the first thing you should understand that the crypto ecosystem is unusual. It is very high performance distributed computing. There's a lot of computing technology which is cutting edge. You know supercomputing, etc. This is supercomputing on multiple different systems in different parts of the world without any central coordination. It's cryptography. There is no need to trust anyone. It's no trusted third party, which is the heart of regulation. RBI, IMF, World Bank. You have trusted banks, trusted stockbroker, trusted depository. There is no trusted entity in crypto. It's all cryptographic. It's just the way you use the web. And it's game theory. There is no police. There is nothing in crypto that will get you any physical force. Some US or China may want to send things. That's not in the crypto system. That's a different ecosystem trying to do. Within crypto, it's all game theory and finance. You get penalties and you get rewards for. So it is coordination at a scale civilization has not seen. You are having millions of people coordinated without physical force. And code is law. The program is the final arbiter of what's done. There is no judiciary, there is no legislature. Code is law. Now, of course, you have all heard Warren Buffett talk. Charlie Munger calls it disgusting, and I will cover some of that. And Balaji Srinivasan has written a very nice book on Bitcoin is civilizational, which I agree. So, is it tulip mania? I mean, our RBI governor said it's tulip mania. So there is a very nice quote which you will see. How do I get the cursor? Okay, I will figure out later. So there is a guy called John Authers. He was the Financial Times editor. He's now Bloomberg Opinion. He summed it well. Tulip mania crashes, it doesn't come back again. If you look at Bitcoin, there are 6 major crashes. The first time was 90%, then 60%, then 50%. It always comes back. And the next high is higher than the previous bottom. So it has no evidence of a tulip mania. In fact, the joke now is in the initial days they say Bitcoin will go to 0, then Bitcoin will go to $100, then $1,000. The current joke is 10,000. So at least the floor has risen. So I would like to assure you that Bitcoin is definitely as safe as any other currency you will blick, and I will explain to you why. It's not a tulip mania. It's volatile. That's a different story. There is a website called 99bitcoins.com which documents celebrities saying Bitcoin is dead. There are 420 odd obituaries, and recently there, and Jamie Dimon and all these are there. None of them have been proved. People have had to eat their words because Bitcoin has done. If you look at the right, if you invested in Bitcoin 10 years ago, you would have made $237 billion rather than 6,000, which is what Google would have done. So it's a very volatile stock, but in the long run, it's the best performing financial asset to date. And that is why many large asset managers, Fidelity, etc., are promoting this for even retirement benefits, and there's a statistical study that 2 to 5% of your assets in Bitcoin will greatly reduce risk and increase your returns. Now, let me get to the conceptual thing. If you have done economics, this is Paul Samuelson, old book, this is I am Ahmedabad. What are the functions of currency? There are 3 unit of account you measure. your wealth, your taxation amount is measured in rupee or dollars. It's a medium of exchange. You can buy, sell, and it's a store of value. That store of value is a mistake. A currency is not a store of value. Then you will never gain any wealth. I mean, your Reliance share is not going to become profitable if it's only going to be like rupees. So that's where the mistake happens. Now, crypto is multi-currency. Every coin, Bitcoin, Ethereum, and I use the symbol dollar BTC. That's the symbol for Bitcoin. I use dollar for crypto. Dollar Ethereum, these are all multi-coins. So when you are doing crypto, you are doing a multi-currency accounting. And therefore, the unit of measure is probably better Bitcoin. Some people use US dollar, you can use rupee. But I would prefer to measure portfolio in Bitcoin. And if you are hung up, you should use Nifty coin. A Nifty coin is 1/1,000,000th of the market cap of Nifty 50. So it's about 200 rupees. That's your store of value. It's not rupee. Money and currency are slightly different things, but I will not worry about that. Money does not need the government. Cowrie shells, the likes on TikTok, the Antarakshi medals you get, they're all currencies if your audience is willing to barter and trade. So barter is the most ancient form of exchange, and you can barter. You can barter postal stamps, original, for a car if it is valuable enough. So unless the law says you cannot barter, you can barter anything. And that is the sole property of a currency, is it's a hub and spoke medium. You barter one good to rupee and then barter rupee to other currency. And that's what we are used to. And that's to do with liquidity. Now, legal tender is slightly different. So in most countries, you cannot pay tax. So you cannot pay Indian tax with US dollar. But you can buy goods in US dollar. You can use Visa card. It will do the conversion. The guy doesn't even have to know you are a US dollar. You can go to Cambodia and pay, go to Vietnam, Dong, etc. But a currency is a IOU. There is a creditor, which is the government, which gives you currency, and it depends on his willingness and ability to pay. The Afghanistan found out that the Central Reserve Bank had $7 billion, which the US expropriated. It's given to NGOs to do work. Is that ethical? Is that legal? Definitely not, but the US is the Pax America, and Russia has found out that a lot of its Forex currency is no longer available. So the first thing you should understand, currency is a debt of someone else, and you have no ability to collect it if that guy is not willing to give it. You can't sue the US government for the amounts they sanction. You can't sue the Indian government for notebandi that happened in 2016. Your currency was of no use in your pocket. It was only the digital amount in the bank that mattered. So that is why the saying is, if you don't hold it, it's not yours for gold. If you don't have your keys, it's not yours. The fundamental philosophy in crypto is no trusted third party. And the government is a third party. The RBI is a third party. The bank is a third party. We don't trust any third party. Code is law, cryptocurrency, and there is a wonderful book, article. Lynn Alden is a very good analyst, macro. She has written a wonderful, it's a long article, What is Money? I would recommend you to read it if you are interested in philosophy. And Ray Dalio, he is one of the largest Bridgewater Finance. He's done a lot of books. It's on LinkedIn. Please read his Changing World Order. They will explain the role of debt, etc. Is it stable? Not at all. If you use gold as a unit of measure, the US dollar from 2020 to today, in 20 years, it has collapsed by 80%. 80%. Is it a good store of value? US dollar is not a store of value. It's a depreciating unit of account. The Turkey had its currency collapse by 50% in December 2021. Sri Lanka just has had its currency collapse. And it's all not just negative. Reliance was a very stumbling stock, and then Jio and others got investment, Facebook, etc. In 112 days, it went up 117%. We have seen this. It has happened in right now. That is a store of value. Store of values are never stable. They are very volatile, and in today's world, they are even more volatile. We are right now sitting at a moment in time where you will remember the dot-com bubble, because things are extremely volatile. Paytm and Zomato, etc., have fallen 60-70% in a hurry. And it's not just in India, even in US, in China, a lot of shares are falling. It's volatile. So is BTC, Bitcoin, a currency? Volatility is not a bug. Now, you don't use a Reliance share or an ICA share to buy coffee, do you? No. So why do you want to use Bitcoin to do normal transaction? It's just it's a symbolic thing. What you normally do is you classify assets into different things. You have a house. It is very illiquid. It will take months to sell it. You may have some money in stocks. If you sell it, it may take 4 to 5 days to come, T+2, plus there may be some holidays. You have a fixed deposit, it may be 10-15 minutes before it appears in your bank, but you typically transfer the asset which you need for expenses to a wallet, like a Paytm wallet or a PhonePe wallet, and that is close to frictionless. The charges will, it may probably be 5 or 10 rupees if UPI charge, it doesn't, so you may send it for free, and it's, so that is the wallet. Wallets are used, a Visa card or this, Visa has a charge, 1.5 to 2%. So the same thing is being proposed when we talk of crypto. So there is a blockchain called Luna. It's run by a company called Terra Foundation. It's based in Singapore. It's a South Korean company. And they have a chai app. It's used all over South Korea. It's a very large financial payment like Paytm. Lots of people buy. It does not use the South Korean won as its payment rail. It's Lunar Coin. But you will not realize it. You buy, sell, it's payment. And that's what is proposed by Jack Dorsey Square or by Strike. They will use the Lightning wallet architecture on Bitcoin. A normal Bitcoin transfer will cost you about $40 and will take about an hour because of consensus. But a Lightning wallet transfer will cost you about 0.5 paisa and will take less than a minute. So that's the architecture we are proposing. Just like you use Visa card and buy some stuff in Vietnam, the Vietnamese merchant doesn't have to know about Indian rupees, and Visa, who does the transaction, may use US dollar as the intermediate guardrail. We use Bitcoin, we use crypto, and that is what Ripple does. Ripple is a very large player for bank-to-bank settlement. The competition for SWIFT. A lot of South Asian banks use Ripple. And Ripple does the blockchain settlement. JP Morgan has the blockchain settlement for the same thing. So that's the currency nature we are talking of, and that's what the RBI says. You cannot use Bitcoin for payment. That is what they are saying. Don't use it as a payment backend, really. Let me now come to real world usages of blockchain and crypto, not the currency price appreciation, real world, which is where the disruptive portion comes in. IRL is in real life. Before I go there, it's a large market. This is CoinGecko. It's a Malaysian vendor, but it's a reliable place for looking at crypto. I will give you some references. There were 13,000 tokens. Tokens are like companies, if you want. And there are 559 exchanges. So it's a very large market. It's unregulated. It's not jurisdictional. Many of these operate 24/7. Crypto does not have a closing day. There is no gap up or gap down in crypto markets. 24/7. 00 hours UTC is normally the end of the day. And you will see there are NFTs and different products. So a coin is the charge for a native currency. So Indian rupees, US dollar, European, EUR, GBP, these are coins. These are blockchains. There are about 100 of them. But many companies exist which we call tokens. So you have Reliance, you have Tata Motors, you have Tata Steel, you have Future Retail, etc. These are tokens, and they exist on a coin. So Indian rupees, or you can, and some coins can exist in many places, which I will mention when we get to trading. So altcoins exclude Bitcoin and Ethereum. These are the two large ones. Bitcoin is the largest and Ethereum. The rest are called altcoins. L1 is a primary blockchain, like Ethereum, Solana, Phantom, and you can see a list at the bottom. Those are some of the larger ones. Near is the hot one right now. And L2s are rollups, because L1s get very congested. He talked about BYC, Ape. When the Ape coin launched, which is on 30th, there was a 3-hour window for them to mint their coins. And it was so congested that the cost of minting went from about $150 to $3,000. So you ended up paying more for minting than the cost of the NFT. To reduce the congestion, there is something called L2, which is like suburbs or highways to take the congestion off the road, and those are the things that are there. When you inquire on a token, so Doge is very popular, it's called a shitcoin. Elon Musk is a big fan of Doge. So when you look, you will see a symbol, DOG. So that's the symbol with which you trade. And at the bottom, you will see that it runs on the Binance chain. It's not on Ethereum. So it is not in the Ethereum country, it's in the Binance. BEP is a Binance smart chain, BNB it's called now, it's in a Binance country. And the stock exchanges that you trade will do this, you don't have to know, but if you're doing it on your own, which is possible in crypto, you don't need a stock exchange, you can trade directly to blockchain. And you will see that there is something like all-time high, all-time low on the right side, and the important thing is to look at volume to market cap. There are lots of coins, lot of inventions. So unless the volume of trade is large enough, the market cap is fictional. In the NFT, there's a lot of scams. Somebody will buy and sell his own NFT and show the price up and get you to buy. So there's no wash rule. It's not a US thing. So there is a lot of manipulation of price. So you should look at liquidity to judge. Anything less than 1% of its market cap being traded is not liquid enough. It's probably a manipulated market. There are different exchanges on which it will run, so you will see it at the bottom. So this Doge is there. Doge is there in most coins, and because it's a shit coin, many exchanges may not allow you. It took some while for Coinbase to list it, but Doge is very popular in Indian stockbrokers. All of them have Doge. In fact, Shibu is so popular that Binance was forced to introduce it because there are demands. Also, there are differences in denomination. Just like you have Tata Motors, which only has, you can give up voting rights. You can have preference warrants. You can have dividend-only rights. Similarly, there are tokens, which are governance tokens, revenue tokens. So there are difference in types of token. Just like you have Berkshire Hathaway, $300 or $3,000, different denomination. There are tokens with different denomination. All those things are there, and you can check when you do it. You have the notion of a wrapped proxy. So BTC is on Binance, on Bitcoin. It's in a Bitcoin is a different country. But if you want to do programmatic training, which is on Ethereum, you can do a proxy. You send BTC to a trusted party called BitGo, and they will give you a wrapped BTC, which is a proxy, and you can use WBTC to trade on Ethereum. And you can take loan and you can do other things. So all these concepts are there, which you will find out when you do real life usage. VET is the largest value supply chain token in China. I mean, they have tried to do it, but trades for mango, banana, milk. Almost 80% of the supply chain in China is tracked by VET. Which is, and there is another one called OneLet. These are 2-3 tokens, and they have been there for about 2017, so this is not new. Helium is a popular, I mean, this is what I introduced in 2018. I was talking at IoT Next, is a bottom-up IoT network. So you buy these Helium routers, which are like Wi-Fi routers, and they run LoRa, which is a network, sub-gigahertz network to connect IoT devices. And it mints helium. Helium was about 30 cents in 2018. It's about $60 at the peak. It's about $30. So you will make a lot of money as a provider of IoT networks. TEL, Koti, Dent, Stellar, XLM, XRP, Cello, these are payment coins. Ripple is very large. In fact, it's a Hong Kong-based organization, and the SEC has sued them. They are fighting a case with US. We all think SEC will lose, because it's not a security by US law. In fact, Luna also, US SEC is trying to sue them. They have sued SEC back. So, because it's nothing to do with US. It's in Singapore, it's a South Korean thing, it has nothing to do with US dollar. So, extraterritorial jurisdiction is not accepted. These are all for payments. TEL is for cellular payments in South Africa, in Africa, etc., for micro payments. And Dent, etc., these are all payments. Payments is very common. Audio, Rally and Gari, these are creator economy. Audio is like Spotify. You can go to their website, you can listen to music. You may not realize that you're doing a crypto transaction because you pay in Visa. The advantage is that 80 to 90% of the money you pay goes to the artist, which is not true for other labels. I am not sure if you realize, but in television, in broadcasting, in Spotify, the artist only gets about 5 to 7 paisa from the ₹1 you spend. So this is a huge reduction of the intermediary cost. A huge amount of money goes to the artist. Gari is an Indian startup. They listed on Solana, which are doing the same thing, and you will see their ads, etc. BTT, Theta, Render are streaming. So BTT is the BitTorrent thing, which is now done. Theta is about video streaming, and Render lets you rent GPUs to render 3D images. So if I have to render three-dimensional NFTs, cricket, etc., I don't want to pay AWS, or I don't want to depend on Azure. I don't want to depend on anything. The whole idea of crypto is decentralization. So you use Render token, and there are thousands of people who are making their GPUs available to render. So these are all streaming rendering technologies. Chilech, which is CHG, is a very popular fan club. A lot of sports clubs, especially in UK, they issue tokens, and cricket clubs will do. Apart from getting discounts for buying things, the NFTs, they also have features. So you can vote on the name for an event. You can vote on the color of a t-shirt or brochure. So there are a lot of, it's not an equity share, which is only vote on an AGM governance. You get voting rights and ability to influence millions of decisions a large club does on many events. And these are very popular sporting fans. And those are examples of democratization of power, which is at the heart of crypto. In crypto, anyone can be a market maker, can be a bank, can give loan, can accept. It is an amazing permissionless approach which shocks regulators. Fill, storage, AR, SC are storage technology. So if you have an NFT, you don't want to store it on AWS. If you stop paying your fee, it disappears, your this thing does. So there is something called interplanetary file system, IPFS and Fill and Arvind, which is new. You pay some amount of money, and they typically have their own currency, which is unusual, and they will propose to keep your data available for about 200 years. So that's as good as we want. It is good enough long-term storage. And it's distributed. So even if one server goes down, the data is available somewhere else. Axis is a very, very popular gaming thing. It was developed by a Vietnamese startup, Sky Maven, and in Philippines and in Brazil, etc., there are about 300,000 playing these games. It had a run rate of $1 billion, very close to Fortnite and Rolex, and it's a powerful example of a very different model. And many people during COVID earned more money by playing Axis than they would have done as a job. And this whole thing is very hot, the gaming industry. YGG is a yield guide game. They have an Indian subsidiary called Indie. These give some money and train people how to play these games and earn money. So they are like a factory shop producer. They produce the army that will play these games. GFI Goldfinch is the first attempt to do real loans. So you buy GFI, the DAO, distributed organization, will convert it to Namibia and Tanzania and other places. They will give loans and they will get the loans back. There is a risk of, they manage that and you go. So it's a real world financing for NGOs. I hope that gives you a feel that crypto is not just about money. There's a lot of decentralization and intermediary less business economics. At the heart of the crypto thing is Austrian economics. It's not Keynesian economics. It's deflationary. It does not use a lot of mechanisms central banks have used. So that's why it's a big challenge to them. There is an article in the New York Times, The Latecomer's Guide to Crypto. You should read it. He has a very good phrase. Apart from powerful tools and hordes of wealthy believers, there is a bunch of idealists whose goal is nothing less than a total economic and political revolution. And that's what frightens banks. That's what frightens RBI. And they create the FUD that this is all terrorists and others, etc. There's far more money in US dollar for smugglers, gun runners, and ransomware than ever in Bitcoin. Let me come slightly to decentralization. Blockchain is distributed ledger technology. The correct word is DLT. Blockchain is a different word. Essentially, no trusted third party. And it is exactly what's happened to internet. original network was host-based, SNA, IBM host, mainframe. It became completely decentralized. Even if a server goes down, you can do. So that's what's happened. It's cryptographically secure. There may be 30,000 nodes running Ethereum, but there is only one singleton truth. And it is not just computers. New York Times has ads run by a company called surety.com from 1991, which is cryptographic hash of lost properties. If you have the title of the property, they will match, they will give you the lost property to you. So it is used in many other ways. This is the quick thing on the architecture. The bottom layer is the hardware layer. Data blocks, networks, etc. The middle layer is network, and Bitcoin has been sent and received over satellite and cellular and ham radio, etc. It doesn't have to depend on this thing. Consensus layer is where most innovation is happening. There's tremendous amount of innovation, how to handle malicious actors, how to handle state-based attacks, how to make sure your money is safe, because there are now trillions at this thing. Incentive layer is important. If you think of these cryptocurrencies as countries, they can give incentives, just like you give incentives to an industry to set up or startups. So these guys give incentives, $300 million, $500 million to do activities. Contract layer is where the programming is there. So, and that is the heart of Ethereum, the programmable money, and application layer is where you have all those things. The important thing to understand is that Bitcoin, Ethereum are probabilistic certainty. So Bitcoin waits for 6 confirmations on a block before it will say this is your money. It takes about an hour, 10 minutes. Ethereum will wait for about 60. It takes about 2-3 minutes. Some blockchains are deterministic, but most blockchains are probabilistic, and they need some time before it will come through. The important thing to understand that these coins, these blockchains charge a transaction fee, just like tax. But the transaction fees are there. So Bitcoin netted about $15 billion in 2021 as transaction fee for the year. Ethereum did 17 billion. Now I will turn to the most important part. And this will help you make up your mind whether you want to invest and how to invest and what to invest. There are 4 models to think about this hydra called crypto. The first one, blockchain as nation states. I mean geopolitical entities. A blockchain has a set of nodes, which is the hardware. It can print its own currency, and it has no constraint. Ethereum or Doge or Solana, it can print just like Indian Federal Bank or Indian RBI can print as many notes as you want. It just adds some zeros to the bank ledger that they have. They don't even actually have to print the money. I mean, it may be hard for you to get 2,000 rupees note anyway, so they just add it on the Bitcoin. Taxes are through fees on transaction, and they are paid for security. So there are miners, validators, guardians who are paid a portion of the fee that you pay, which provide the security of the blockchain. And they make sure there is no malicious attack, there is no etc. There are macroeconomic policies. So Doge is very inflationary, about 10%. Bitcoin is deflationary. Every 4 years, the amount of deflation. So therefore, Bitcoin prices tend to go up because of deflationary. There are incentives to start STP or a factory, and this, like for Near, is giving about $300 million. Binance has a $1 billion fund for different types of startups. The important thing is seniorage, and you have heard of seniorage. RBI gives 60,000 crore dividend. That is seniorage. This is not paid to any government. It is paid to people who are securing, validating, or have staked the coins. So Ethereum currently gives 6% interest rate, and it's risk-free as far as Ethereum is concerned, because it's a share of the transactions. There is no indebtedness alone. So the risk-free rate for the Ethereum economy is 6%, compared to about 1% for US dollar and about 4% for Indian rupee. And that's where the money is. Tokens are companies. So they are issued by registrars. I will explain when I get to the trading side. The unusual thing is, like if you are buying Jio cellular connection, you pay in rupees. If you're buying a Maruti car, you pay in rupees because it's an Indian domestic product. But in crypto, you don't. Typically, you will have to pay in a currency, like you will have to pay in Dent or you will have to pay in Tel, which is the currency of that startup. And you have to transact from Ethereum to that currency and pay. So this is very unusual and can complicate. But every company has its own currency and you need to convert and buy and transact. There are trade zones. So costs, and we will see this when I give the example of operating system. So Linux is there everywhere. I mean, your Wi-Fi router, your television, TV, all smart TV, smart appliances, they all run Linux. So Cosmos, which is Atom, is the Linux of the thing. It's open source software, Tendermint, it's used all over. There are about 60, 70 blockchains using it, like Luna, etc. Polkadot is like Apple. It has the controlled 100 blockchains, which are only allowed. And Luna, of course, I mentioned. Near is the new one, and Avax. These are called modular blockchains because they allow multiple countries. So it's like the European Union or I mean, these are treaties which work. Currency's value is only backed by the taxation a company has on the GDP of the economy. The value of a US dollar is your assumption of the GDP and taxation that the US government can have. Which is related to the transaction fees in crypto. The par value we understand, but if you use this traveler's check, you may not get par value somewhere else. There is a haircut. Interest rate is a measure of deflation, inflation. The Forex rate, which is what happens when you talk price of crypto, you're talking of Forex rate to Indian currency or Forex rate to US dollar. It's a function of various things, and Forex rates are also volatile. Commodity or hard assets is important, and there is a very interesting article which you should read, which is Jolston Poser, who's talking of Bretton Woods 3, and we are right now seeing tremendous inflation of hard assets. You may not be aware, fertilizer has doubled. Steel price has gone up 4 times. Shipping from China to San Francisco went from $800 for a cargo pallet to $10,000 today. We are talking inflation. The important thing is liquidity. If you are transacting 1,000 crore of gold, you can't do it at a retail shop. It may take time and the price may change. So typically every market there is an impact if you do a large trade and how much you can do. Blockchains as operating system. If you think of Windows, Ethereum can be considered Windows. If you think of Linux, Cosmos or Atom is Linux. The Mac, Polkadot is Mac. So these are unique. And there are some unique applications. So NBA Top Shot, which is an NFT, is only available on the Flow blockchain. You can't get it anywhere. But Tether, which is a stable coin, equivalent to about $1 US, USDT, is available on all of them, which is like a PDF. You can read it in all systems. And there are interoperability, there are bridges. A lot of this is being invented. It's not yet stable, but all this is happening. And their theory is that there will only be 3-4 ecosystems which will survive. So from 100 blockchains, people assume. I don't think so. I think there will be 6,000 blockchains. That's a separate issue. This is operationally the most important. This is where the most innovation will happen in the next 2 years, which is to reduce the fees that you pay on a congested day because of an NFT or a game. So L1 chains have different policies and usage. How do you reduce the traffic jam on the road? So you build a flyover, you build a metro, you build something else. So same things are happening there. There are industrial townships like Disney theme parks or aluminum factories. So there are specialized blockchains for gaming, IMX, for payments, and for NFTs like Flow. Or you build skyscraper, high-rise building. And that's what's happening with Optimistic, Arbitrum. These are skyscraper and Ethereum blockchain. Ultimately, all of the people have to come to the street and go. But most of the work is done in the skyscraper, and the petrol and the water and gas are piped up. They don't have to have vans to go on the main road. So the congestion on the main road is reduced. Or you can make it a suburb, which is Polygon, which is an Indian startup, which is about $8 billion. There, most of the people they don't live in Manhattan, they live in New York, Jersey, or Queens, or somewhere else, and they rarely come to Manhattan, and they bus over, so the transaction fees get reduced, etc. So all this is going, there is a quote, nobody goes there because it's crowded. And the last one is the financial approach. Now you are used to financial statements. So if you take a large company like an Allianz AG, they will have 800 subsidiaries. Reliance will have many entities. So certain large entities will be reported in the ledger and some will be just a footnote and you actually may have to write. So those are parts of the accounting. So if you look at the RBI can tell you M1, M2, how much currency is issued, and in crypto there are two types of accounts. One is UTXO, unspent transaction output, which is what Bitcoin and Cardano uses, and account based, which is what most of the use. But the balance of a token, Uniswap or SushiSwap, the Ethereum RBI doesn't know. It has to be the registrar of the company. So every token has a smart contract on the Ethereum blockchain or on the Solana blockchain, which is a registrar in that country for that company, and they will tell you how much balance you have. So tokens are registrars. So you have different types of ledgers. Let me give you a simple example. Ravi challenged me that I have to explain terminology in a simple way. I hope I'm doing a reasonable job. So you can have a general ledger for a large company which is total revenue, 7,000 crores. You can have a sales ledger which gives you total sales by large countries or by large customers or by most significant material impact. And you can have a very detailed ledger which tells you each sale transaction done for a customer. So those are different levels of summarization. The blockchain is public, it is at the lowest level. But for accounting, for understanding, you have summaries. So this is where L3, L2, L1 is there. So some data is kept in L3. You will not see it on Ethereum. Once in a while, a batch is posted. This is like how Paytm wallet or PhonePe wallet will do. Every transaction is in the wallet. It will only affect your bank as one transaction. So that is what these roll-ups do. And reconciliation is there. Just like if you transact, if you have Chinese investments, Brazil investments, multi-currency accounting, year-end accounting, and lease, etc. There are differences in accounting standards. All that are there. That is handled. So I think that covers the conceptual part. I will take a break and we can take some questions.
Awesome. Yeah, thank you so much for the session. I had a quick question. So if today I want to buy shares in a publicly listed company on any centralized stock exchange, there's a huge chance I can Google the company, find out all sorts of knowledge and information about the inception of the company, the identities of the founders, what they're about, who's backing them, so on and so forth. The same can't be said in Web3 and crypto. We saw recently with the Bored Ape Yacht Club, which is the world's largest NFT project, right? BuzzFeed doxed the identities of the founders, I think, in the first week of Feb. And that was the first time the whole world kind of knew, okay, who is actually behind, barring their, Ethereum handles. We actually knew the identities of, the founders of the Bored Ape Yacht Club. Since there's no centralized regulatory authority, as you said, right, in crypto, do you think that this Bored Ape Yacht Club, because it is the world's largest NFT project, the fact that they were doxed, do you think in the Web3 space, we're going to see a huge push for there to be a centralized authority which mandates that the identities of these founders be disclosed?
Yeah, I understood. Yeah. Most people are used to centralized regulated things. So you are reflective of that. And there is a huge demand to have regulation and centralization. I am not in that camp. And I will remind you of a very ancient thing called the Ajanta Ellora caves. You see those paintings. There is no name for an artist. Anonymous creative work have been far more popular and common than this fiction of a regulated, doxed artist. It depends on your assumption. The largest frauds happened. We had what was the guy? Ponzi scheme. The Jewish Madoff. Ponzi scheme. He is part of the New York Stock Exchange coordinating committee. He is known. He is a part of the regulatory framework. Enron, ILFS fraud, Yes Bank fraud. I mean, these are all regulated entities. What are we talking about? This is the brainwashed assumption, if I may really put it back. Reputation does not depend on name. It depends on your behavior. And the problem with crypto is I don't need an auditor or a regulator. 24/7, it's public. Uniswap, the solvency of most protocols are available. And the codes are normally open source. You can read the code. It's very, very common in crypto not to know the people because they are threatened. They are in countries where they may be given a gun and their money will be stolen. It's extremely common to have anonymous or pseudonymous ID in crypto. VCs fund it. It's extremely common. If you're uncomfortable, don't buy those things. It's a very simple. Reputation does not depend on name. It depends on behavior.
Thank you for the session. Can you throw some light on the vulnerabilities in either hardware or software stack, because those are something.
Yeah, okay. This is a large topic and I will not spend much time on it. There is a lot of architecture, cryptography, etc. in play. The most common problem was till about 2019 there were a lot of weaknesses. But since 2019, a lot of tightening up has done, and there is very little. And I have a recommendation when I'll come there. Don't use the normal browser for your work. Actually, you should have a separate device, a small burner phone for crypto trading. Use a different browser. I recommend Brave. I will come to that. Use a different search engine, not Google, DuckDuckGo. Use it for a short while for trading and don't do too many things because you want to avoid PDFs or malware which get injected in your phone through these devices. If you do that, the chance of being vulnerable is very small. And there is a very extraordinary property which most people don't understand. Since 2020, almost 95% of the time, if you as a user suffer from some problem, not your fault, you did not give your keys to anyone, the protocol pays up. There was a $300 million hack of wormhole, Solana. Within 1 week, it was reimbursed. There's a $600 million hack of Sky Mavis, the Axis. Within 1 month, they have all been paid back. Ape the launch, there were a lot of failed transactions because of the congestion. So 230,000 US dollars has been replaced to everyone who had failed transaction within few days. The reputation matters a lot and the reimbursement rates for the end user is almost very high. So you don't have a problem for systemic failure of the exchange, etc. All those are there. You always have to be careful. Your UPI can be stolen. No, you can get those QR code which is actually withdrawing money from you. So all those tags are there. You need to be careful. But I don't think there is too much worry. If you keep a separate phone, separate browser, separate email, you should be fine.
One is they say that the Bitcoin has got a monetary policy, in the sense that it's got 21 million coins. You can't print more than that. And each coin is divided into rupees and as pice, whatever, satoshis.
Yeah.
Whereas the fiat currency like dollar or any other thing can be unlimited printed, like you said, it's an entry in the computer. So nobody is preventing them from printing it. That's the reason why one Bitcoin is like 50 lakhs or $50,000. It's being debased. The question is what ultimately happens when this 21 million coin is reached, and how are we going to transact? Is it really sufficient for transaction? That is number one. Number two is the cryptography. I mean, the whole thing is based on cryptography. It is safe, and but when quantum computing comes, this cryptography will go for a toss. So is there any strategy for that?
No.
And the third question is, when China, Russia, EU, USA are all partitioning their internets.
Correct.
So how is this whole thing going to be affected in this thing?
All right. Let me take the deflationary. We are used to Keynesian economics. At the heart of crypto, and Ampleforth is a very good stable coin, is Austrian economics. It's deflationary. And this is a large political economy subject, which I will not get to, but there is no problem with Bitcoin's supply. Bitcoin, most cryptocurrencies, the denomination will go up to 8 or 9 digits. He talked about the Satoshi, which is a billionth of a Bitcoin, and Ethereum goes to Gwei, which is 10 to the power minus 18. So the fractional accuracy of these coins are large. So 21 million Bitcoin is not a constraint because you can have 21 trillion Satoshis to trade with, and a Satoshi may be $5 or $10, depends on demand and supply. Just like the GDP of a country is not a function of the money printed by RBI, it's a function of the trading, economic activity and the barter that you do. the money being printed by RBI controls interest rate. It does not control the GDP of the economy. So that is where the confusion is. The Bitcoin supply will force Bitcoin value to go up when the economic activity on Bitcoin goes up. It has no limit on the transaction you have. So that is one. That was on the
separate internets, countries.
splinternet. This is a problem. And nobody really knows how this will play out. But Bitcoin runs on many nodes, 40,000 nodes, Ethereum 13,000 nodes. As long as even 10 or 12 of them are available, it will go ahead. And they adjust. So Ethereum or Bitcoin, the complexity adjusts depending on hash power. If there are many people, it becomes more complicated. If there are less, the hash power drops. So it is a self-regulating thing, but there will be enough Bitcoin. I mean, China has tried to ban it, EU is trying to ban it. It is expected. The architecture is like what internet was, designed to withstand a nuclear bomb. So Bitcoin, Ethereum are designed to withstand state sanctions. Unless large economies like US, EU, China, all start to attack, it's unlikely it can be stopped. Alright? Quantum is a difficult subject. As far as we are aware, most of the cryptography will survive quantum. This thing. It uses elliptical curves. Not necessary. Quantum can solve prime factor algorithms, but elliptical cryptographies are still beyond quantum slope. And it will change. If it finds, then some. And cryptography is not just for this. All your banking transactions are the same cryptography. It is nothing different. So if quantum breaks it, all your banking transactions will also break. Yeah, but I don't take it too seriously. Can I go ahead to the next set of presentation?
Would it be right to say that this thing depends on miners as well as the, the nodes? And what is the incentives for them to stay in the game?
No, they are
Would
paid.
that be very important?
No, they are paid. See, part of the fee you pay, see, there are two ways. The miners and validators are like what the police and the army is for a country. So you need enough and you need to pay them. And that is where I mentioned. So Ethereum earned around 18 billion in a year. And about 12 billion is paid to the miners and validators. So miners are very profitable. And in the older days, you could mine Bitcoin on a Raspberry Pi. Now it's very difficult. So miners get a share. So every time a Bitcoin block is added, 4 Bitcoins are created fresh and given to the miner. That's about $160,000 for doing the work. So there is an incentive mechanism at play. It's either a fee from the transaction or new coins are printed, which is the inflationary one, like Dogecoin and Ethereum, etc. They are paid. Okay, so crypto is young, fast changing. One of the things you should understand, it is 4 times faster than equity market. So a week in crypto is a month in equity, and a month in crypto is almost a quarter, and a quarter is a year. So it's a very fast market. And a 20% price jump is very regular on a daily basis. And I have seen many coins where I have had 100-150% jump in a day. So it is very, very common to see it go up and go down much more than you are used to in equity markets. It's a 24/7 market, and tokens may be denominated up to 18 digits after decimal. So you should watch carefully, like a safe moon can be will be a trillionaire very fast. And classifications of a coin, is it a DeFi coin, is it an NFT, are not standardized, and different exchanges will classify them separately. You need to be careful when you are on different spaces. Mega caps are greater than 10 billion, there are about 30. Greater than 1 billion, there are about 100. You should probably stick to this. Don't go for much smaller ones because you need to know a lot before you do. 500 million is mid cap, and less than 50 million is penny stock, alt caps, etc. So I would suggest that you stick to the first 100 coins and most exchanges in India will limit. They will not go for a lot of small ones. The 4 segments that matter. First is blockchains, L1, like Bitcoin, Ethereum, Solana, Phantom, Near. And these are probably reasonably safe. Many of them have survived the 2018 bear market. 2018, Bitcoin fell by 60%. 2013, it fell by 90%. So these have survived, and they're probably quite safe. The second is a very large thing called DeFi, decentralized finance, which Ravi talked about, and The Economist has an article. They did very well in 2021, summer of 2020, but they are not doing well now. But they generate revenues. They are decentralized swap options, so they are there. Then there are social tokens, which is NFTs, fan clubs, games, metaverse. These are fairly hot, and they have done very well. ApeCoin, which he talked about, it listed at about $6 and went to 26 within few days. Right now it's about 13. It will still go up. So these are what I call poopers. Poopers are coins which will go up and down very fast. If you have ever traded on GameStop, I don't know if you're aware, it is a very volatile currency promoted by Redditors. And I have traded in one single day in a 3-hour session from $24 to $420. So
420 is appropriate.
And so these are there. Then there are industry things, so for payments, for supply chain, etc. So these are the 4 class things. When you do valuation, DCF, etc., they can only work for industry tokens. For the rest, none of those valuation methods will work. The L1 segment is where you should put most of your money, and you have Bitcoin and Ethereum, which are probably hodl category. Hold and do not sell. Don't. Hold on for dear life. And it will fall. I mean, from 69,000, Bitcoin is around 35, 36. Will probably go to 32. Stay put. Put only the money which you will stay put. Bitcoin and Ethereum, my suggestion, you put 25% of the money you want to put on crypto. That's your choice. But don't panic sell. If you may not be aware, Apple has fallen by 70% on many years. Amazon has fallen by 80-90% in certain years, but they go up. So these are long-term stay. The second one is the next set. So Binance BNB chain listed in Q1 2020 went from $40 to $520 in 3 months. Parabolic. Today it's about 300. Solun, Avax, Solana, Luna, and Avax listed in Q2, Q3. They all went up 400% in 2 quarters, and they're still doing quite strong. Phone is Phantom, Harmony, Cosmos, and Near. Cosmos is very old. Near is also very old. Phantom is also very old. Harmony is a new coin. They are doing reasonably well. And 2000, there is this crash, etc. So these are the coins you should look at. The bottom, you will see the numbers. So, for example, Polygon got 40 million investment. Solana got 200 million investment. Avalanche, which is Avax, got 293, and the Solana got 335 million VC investment, and then you have Luna, which has got 553. So these are all investments. There's billions of investments being made in this. The next set is DeFi, which is bankless thing, and the Economist has, and the World Bank and the IMF, all of them are issues. The important thing to understand, permissionless. You can be the market maker. You have a seat on the exchange. Uniswap, SushiSwap. Uniswap is a decentralized exchange which does more volume than Coinbase does. And you can be a market maker, a seat on the exchange for $100. This is what frightens them, but that's the way it is. And they use AMM. There is no limit order, there is no order book, so it is a simple conversion. You say, I have Bitcoin, I want to buy Solana. It will quote you a rate, you accept, and if you delay, the price will change, and it will transact, and in your wallets it will change. And some of these provide very high interest, 100% APR, but that's also because they print, it's not just interest, it's also new coins are printed and given to you as marketing awards. So a lot of these high things are good for bull market. In a bear market is about anything paying more than 12 to 15%. Actually, I should say 25% or more, be careful. in a bear market, it will not survive for long. The reason they pay such high interest is fractional banking. In real life, a bank will keep 30% and lend it again, and the fresh deposit lend it again. So 6 to 7 times leverage. The banking system has 6 to 7 times leverage. Deposit of 100, the overall loans will be 700. And that's where RBI and banks make money. Same thing happens in crypto, and that leverage is given as interest. That's how you get higher interest. This is a DeFi map. I will not spend time. DEX, lending, derivatives, stable coins, chain layers, wallets, supply side aggregators. This is a very active market. There are about, you will see on the side, there is about $729 billion on the chain. There's $230 billion on the lending, borrowing, etc., and $6 billion in the aggregators things. And you can, all of these will be available on most major exchanges. You can buy. Valuation or lack thereof. DCF based is common. Most of you have been taught like that. It's a mistake. This is very young economy, very fast growing, very volatile. There is no way anybody has an idea what growth rates are. Many of the coins have had 300% growth monthly. And they have sustained it for 7-8 months, and then it falls off. So it's a very sawtooth pattern. So it's very difficult to do DCF, but there is a valuation for Ethereum, which values it at $6,000. There is a money flow, which is how GDP is valued, no? Currency money flow, which is very common for most coins, and there are references that I have given. And there is a very popular for Bitcoin called stock to flow, which is nothing similar, which is an inventory flow model, which is the way you value anything. As long as there is demand, then the rate at which Bitcoin is printed and the rate at which demand is there, what is called price earning growth in stock. The PEG ratio decides it's reasonable or not reasonable. So the demand to stock flow is a measure of price earning growth. The growth in demand and the printed, all these valuations are there. Volatility is very high. The main cry is Apple. You may not realize, but Apple has dipped by huge amounts. Amazon also has dipped. So and Apple is a very high quality stock. It's the world's highest market cap, close to 3 trillion at its peak. So volatility is a feature. Don't let it stop you. Now whether you want, how much you want to put is a risk sizing you have to do. The important thing to understand is that crypto is far more volatile than equity. So Tesla is one of the more volatile big cap stocks. Crypto will be about 4 times more volatile at the minimum and 10 times more at maximum. So be aware of volatility when you do that. I talked about the Elon Musk hypothesis. You all are aware of efficient market hypothesis, which is the heart of portfolio management. It doesn't work, by the way. So there is an alternative called Bored Apes hypothesis, which is a lot of people in COVID had free money, had no real expenses. They all bought NFTs and JPEGs and Bored Yacht Club. But more relevant is what I call the Elon Musk hypothesis. It is borrowed from Matt Levin, who is an opinion writer in Bloomberg. Elon Musk hypothesis. And it's the notion of attention economy. A tweet from Elon Musk has more value than any feature of Tesla car. A tweet typically adds about 50 million to 700 million value to his market cap. And he's a guy who has created a $1 trillion company, Tesla, 100 billion SpaceX, 5 billion Neuralink and Boring Link. So, and in 1 year, and it may shock a lot of you, he has created more market cap value addition than Warren Buffett has done in his entire lifetime. So they're a very disruptive economy which is based on attention and capital markets rather than income and dividends. And the valuation difference is like agricultural income where a lakhpati is rich and a post-industrial income where a kharapati is rich. So we are talking of very different valuations that your crypto is kharapatis. They are not lakhpatis. When you are trading, you must pay attention to Fibonacci. Technical analysis is important in crypto, unless you are doing hodl. You need to look at a trading view sort of a thing, and you need The entire market is driven by bots and algorithms, so fib levels are very important to set buy, sell, and loss. And just to this thing, I have given you some numbers like Binance Quarter Chain 440 to 50, Matic from 0.37 to 1.1. So these values are very high. Guidelines. Whatever money you want to put for gold, for example, you may please plan about 50% of in crypto. If you have no gold, you are convinced it's not gold, that's your choice. But in general, 2 to 5% of your disposable wealth should move towards crypto. The volatility is high, but the alpha, the risk-adjusted return, will improve by around 50% over a decade. And that's what Fidelity and others have found out. HODL a small amount, BTC or ETH 25 to 50. Large caps, another small bucket. Mid caps there. And for example, you can look at exchange listings, whichever you go. They will have a newsletter, Telegram group, they will add. Crypto Twitter is very common. I'll give an example. There is a broker, Vault, which is which is my recommended one if you are going to start new. They have these baskets, so you can invest in like SIP. You can invest. So Graph, Mana, ENJ, these are the NFT things. The BTC, ETH, Ripple, these are the things. So there are baskets of these coins, and you can set up an SIP and you can buy them. And some of these shit coins are very popular, like Bitcoin, Shibu coin, which is deflationary, no value. All those textbook theory guys will say it is the 15th largest coin in the world, crypto coin. It's a very large valuation, and I have made a fair amount of money there. Binance was forced to add it because it needed millions of wallets. Even Coinbase is being forced to add a lot of these things. Anonymous founders are fairly common. And it's not a no-stopper. Can I move to the actual trade structure? So far, so good. The ledger is decentralized, so there is no repository. There is no CDSL, NSDCL, DTCC. The blockchain is the depository. Your account is typically a 64-byte string and your transaction, so you don't have a name. And you better know your account number, and you better have your keys, because they are the only way you can operate. They are the ownership. You may get a wallet or an aggregator, which is a UI. It's a holder of keys. It's an interface to the exchange. Certain coins like Tether, which is USDT stable coins, they will have a custodian. The Tether Foundation, which is in Bahamas, is a custodian for Tether. And Lunar Foundation is a custodian for UST, which is a stable coin outside the US. In the exchange, you can do P2P. You don't need an exchange to buy, sell. And it's fairly common to buy US dollar, etc. And reporting is poor. So most exchanges, reporting is poor. If you're doing a lot, you may need special software to pull accounting. Most exchanges have an API or a CSV. You can export it out. You can do accounting, taxation, etc. One of the important things to understand, in crypto there are two types of exchanges. Centralized exchanges like Binance, Coinbase, Gemini. They are a combination of many things. They are a stockbroker. They are an exchange, they are a market maker, and they are the custodian, which is what SEBI, SEC, etc. get worried. But all these roles are played by them. They will give you a wallet, you will have an exchange app, and you log in. Typically, don't use SMS OTP. There is an OAuth, Google, etc. And they will do the transaction. There are about 40 large sexes and 150. And KYC is applied. FATF rule is applied. When you do KYC for India, they will ask the PAN number, and they only take bank transactions. So banks are linked to Aadhaar, etc. So the KYC is complete. They don't take cash. It is bank to bank. If you're doing international, they will ask for a selfie. They will ask you to hold your ID, PAN number or whatever, and you will sign a piece of paper, KYC for this account, and take a selfie. That's the way they do it. But it's fairly fast. You can set up an account within 15 to 20 minutes. In quite many exchanges, you can send money. Only withdrawal, you need a KYC. The wallet or UI is designed for that. So typically you need to understand that you are doing multi-currency transaction. So you need to select a market. So I have marked a fiat market. So here, this is Binance. You can trade in Australian dollar or Indonesian rupiah or Brazilian coin or UR. So there are different fiat markets. In India, it will just be INR. But you can also trade in crypto markets, BTC markets. So it is so it's a Forex transaction between one coin and BTC, not between rupee. Or you can trade in Ethereum coins or USDT, which is a tether or this thing. So you have to select your market and you can trade on that. Indian guys are actually stockbrokers. So WazirX, CoinSwitch, they are not really large to be exchanges. So apart from INR to Bitcoin or Ethereum, where there may be enough buyers, all the other coins they are doing off Binance or Coinbase. So they are actually a stockbroker. Binance is the largest. It's about 4 times larger than anyone else. And Huobi, Coinbase there, and they have, Coinbase for example has a simple option which is more expensive. The fees are about 4%, and a professional one where the fees will be about 0.3%. You have fees for deposit and withdraw. If you deposit rupee, in India they are waiving it off, but typically when you put US dollar etc. in most exchanges, they may have a deposit fee. When you withdraw, they all charge fees. Even if you are withdrawing Ethereum, they will add a network fee, which can be significant, and it will also vary by date and time. So I have seen Ethereum withdrawals cost me between $150 to $3, depending on a Sunday evening or this thing. So you need to choose your time to withdraw. The trading commission is there, it's a volume based, and typically centralized exchanges, you should not be looking at paying more than 0.5%. And you could probably do 0.1 if you have enough volumes. Swap fees are there. So these are the terms you do. When you are sending crypto to someone else, please be careful. You have to select the country, which is the blockchain, and the account, the address carefully. Because the same token, like Matic, which is Polygon, which is the Indian exchange, is there on Ethereum, is there on Polygon network, or Tether. So you have to select the coin, ERC20, BEP20 correctly, which is like going to the wrong country and trying to buy Amazon shares. It may be a different Amazon than what you expected, or it may get lost. And when you send it, there are explorers. All blockchains have explorers. This is Etherscan. It will show you, there is a transaction hash which your exchange will report. It will show you what you have done. It will also show you, this one you have bought a token. It's sent to a contract. You have not sent to another party. It will also show you the transaction fee. So it is public. You don't have to worry about the blockchain. Anybody in the world can see this once they have the hash. And that is why this claim of illicit financing and dark web, all that is useless, because blockchain is completely transparent. No other system in the world is transparent. You don't need any auditor, any CBI, anybody's permission. You can see it 24/7 all the time. When you are transferring, certain coins are very free. So I can transfer US dollars, USDT, Tether, from one exchange to another if they both support the Tron blockchain, TRC20. It's free, and it just takes 2 minutes. But if I have to use some other Ethereum, then it will take about half an hour and it will cost some money. In this case, it is going to cost $25. So there are different blockchains and there are different ways you can do it, but just be careful how to select, and you can do. Typically, when you are doing it first time, take a screenshot of what you are doing, because very difficult to get support if you don't have documentation. Telegram groups are the best place. The website, the tickets don't work as well as Telegram groups. And Reddit and Telegram and this thing are the best. So you should be able to do that. Apart from normal trading, most centralized exchange have other things. So they will have a margin account. Typically 10 times margin to 20 times margin is very common. This is shocking. In India, SEC, SBI the SEBI doesn't want you to have any margin at all. Interests are also given. So this is World, which is very, very popular. It's funded by SoftBank and Coinbase, etc. So this is in India. So you can see on BTC, they will give you 6.7% every month, and it will auto roll. Or if you give US dollar, they will give you 12% interest. Fairly risk-free. There are mining pools. You can pay some amount and you will get a Bitcoin miner and you will get some money depending on what it is. And there are lots of campaigns. You will get a lot of free tokens, free things. A lot of activity goes on, a lot of marketing promotion goes on. And if you are not using a centralized exchange, I am close to the end, so this will end. If you are using personal wallets, which is what the European Union doesn't like, then you should use your own hardware. That means a separate phone, MetaMask, Trust Wallet, DBank, InstaDApp. Keep your 12 words safe because you can recreate a wallet on any device. It is the 12-word phrase. There is a standard called Deterministic Hierarchical Address Generator, BEP 441. So that 12-word address, I can recreate your private keys on any other wallet in the world and I can take control of your transaction. So you should keep that safe. Use a separate browser. I prefer Brave or Opera and use DuckDuckGo and use a different phone and different email ID. That's how to be secure. Do not connect for long. And if you have large bags, if you are holding say 25, 30 crores, keep them in separate wallets. Don't keep everything in one place. Keep them in separate wallets. If you are doing P2P, you can, WazirX India can allow you to buy, but international networks are Simplex, Ramp, etc. These you can use to do through credit card, etc. buy coins. I have covered all of that. Any questions here? Then I will go to warnings or rug.
Thanks for the nice presentation. Two questions. First, there are various elements in the value chain in this crypto world, so to say mining, financing, trading, storing, both money and information, everything there. So where do you think going forward in next 3 or 5 years, there would be maximum value? Will it be in mining or people trading or storing or financing or what?
Okay.
That's one. And second question is that you mentioned in your presentation that going forward, you see the blockchain and crypto consolidation. You don't see, sorry, people say that from 100 it will get down to 5 or 6, and you think it will get down to 6,000.
Yeah.
So if you could please explain that.
Yeah,
Thank you.
okay. So the first thing you should understand that the innovation of crypto is unlike internet, TCP/IP, which is transfer of data. Crypto information and monetary value are together. There is no separate way the finance and data go together. That's the largest innovation in crypto. There is no separate entity. Financing, data flow, storage, everything is integrated. A blockchain is kept alive by 15,000 miners. You don't have to worry about them. They are taken care of by the fees you paid for. To give an example, Uniswap, which is the largest decentralized exchange, has 12 developers. It handles more volume than Coinbase does. Coinbase has 2,000 employees. And its balance sheet is available every day. The liquidity, the fees, the earning, 24/7, it's there on the website. I don't need any auditor. So it's a very different world, which regulators don't understand. It's the most transparent, real-time, no custodian risk, no counterparty risk settlement system. So all those concepts are ancient bullock cart approach to the modern world. In terms of why there will be no consolidation, this is a fundamental misunderstanding because of a regulatory framework. How many artists are there? How many movies are there? How many books are there? Why should there be any limitation? As long as there are fans who are making it profitable, they will be there. So what is a blockchain? It is a fan club. Tesla, I will give an example. Elon Musk in 2018 was close to bankruptcy. He has mentioned they didn't have money. Many people were betting that Tesla will collapse. Hedge funds have lost $60 billion shorting Tesla. And Tesla went from 60 billion to a trillion hedge cap, joined the S&P 500. Why? It will shock you. Nothing to do with electronics or Tesla or EV. The fan club of Elon Musk, the fan club kept buying his shares. Banks did not advance him money. Institutional investors did not invest him money. But every time he had to issue shares, his 80 million fans would pay up. It forced S&P to add them. It forced hedge funds to lose money. So the fan clubs is what drives valuation in crypto. It's attention economy. Likes is the only currency that matters.
Can you help understand the valuation mechanism behind the cryptocurrency, let it be a BTC or Ethereum or any other coin? And why is there such a kind of a volatility around it? Like if I say a USD currency, for example, as compared to INR, it's running around 75 and it fluctuates 2 rupees, 3 rupees, up and down. It's in a band of 72 to 77 now. Earlier it was a different band. But there is a backing and a mechanism running behind it. Here, what is the monetization behind cryptocurrency?
You are asking the wrong question. When there is disruptive new technology, it is not possible to understand it by trying to stick ancient way of thinking. I'll give an example. Uber. Clinic, he went to China. He said the thing that shocked him and he learned there was loss making. The whole notion of the customer having to pay the full value is an ancient business model which no longer works. You look at most Google, Facebook, they don't charge the customer anything, but they're extremely profitable. So by the textbook theory of startups you have learned, they're all loss-making companies. The customer never pays. So the customer will be subsidized and other ways will be found to make money. I'll give an example of Cropping, which is a company startup here in agriculture. They monitor about 2 million acres. The farmer doesn't pay them money. They get money from the bank, from other fellows. So this model that valuation depends on the customer and valuation is a misguided attempt to apply textbook theory developed in the 18th century to something which is very different. It's attention economy, it's fan clubs, and its willingness of people to pay. So why does a statue, a Mona Lisa, cost a lot of money? Why does an artist or a statue or a collectible cost money? Wine, art are collectibles. They have no valuation using DCF. You can apply DCF. Lot of VCs, lot of people, Ethereum, lot of blockchains have applied. Most of them don't work.
What about the complex infrastructure that is developed behind this? There is a key, there is a some can store it.
It is not complex. It is not complex. It is new. It is like a DVD. The first time you see, you have to press this key, that key, recorder, time, like this thing. It is not at all complex. It's extremely simple. If you take your bank, you need a credential for your bank. You have an ID and a password. Correct? Same thing is there in blockchain, but that credential is not a set of numbers you will remember. It's a large key, it's a 32-byte key. A software or a tool will store it. So you will have tools which will store the private key, and there are naming systems. There's an Ethereum naming system which has come. So your address is a email type address, so it's very easy. All those will get developed. It's early stage in the technology. You are talking about it 10 years from now, it will be as simple or more simpler than your Web 2. It is very early stage. All these complications will go away. It is like doing internet where you had to understand TCP/IP and DNS and you have to set up all those things. That is the technology stack which will get simplified. Today, you don't worry about this. You just buy a phone and you are connected to the internet. No? So that simplification is happening. Wallets which simplify all this are coming.
Sir, first of all, thank you for the session. And like we all know that India added 40 billionaires during the pandemic. So I want to understand the social impact that cryptocurrency is going to create. Like, can it eradicate poverty?
I don't think so. But the advantage of crypto is it is permissionless and it is available all the time. So you can introduce banking, you can give people money all over the world very fast without problem. To give an example, Ukraine, 150 million was sent through crypto, it couldn't be sent through banks. So it has the facilities of being permissionless and instant and anytime, anywhere. But eradicating poverty is a different issue.
Thank you, sir.
Something you said reminded about the fan and the fan club thing. I think Taylor Swift, thanks to her fans, she re-recorded a lot of her old songs.
Correct.
Because the PE fund was not, I mean, basically she's not getting any money. And she sold more through the re-recordings than the original recording because of the fans.
Yeah, so that is what I was to say, that crypto is a revolution of fans. It's a democratization of economic power to the people. So the important thing to understand, there are a lot of bots, there's a lot of price manipulation, and there's a lot of pump and dump. So you will suddenly see a lot of people saying this will go to A, it will go to the moon. They never fall for that. So there's a lot, it's a deregulated market, it's the Wild West. Be careful, but you can make good
So
money.
would it be right to say when you said do 2 to 5%, you must be prepared to lose it. Put that much money in crypto that you're ready to lose it?
That is what most traditional guys will say. I will put it the other way around. If you are worried about a World War III, you better be in Bitcoin.
So on that note, I don't know about the others, but I think I'll have to watch this video 5 times to fully digest the stuff that was out there. It's amazing, I mean, in terms of your knowledge in this whole subject, Arvind, thank you so much for doing it. Okay, so thank you so much, Arvind, for doing this, and thank you, audience, for hanging in.